So welcome to today's LCG market analysis webinar. We hold these every Monday. This is this week's edition, of course, 15th of May. A few political developments to be expected this week. Similar thing from last week, nonetheless. We're just pushed into new record highs for the FTSE 100 and for the German DAX. Oil prices are rebounding. So there's a few things going on. So we'll try and cover those topics in a bit of detail, and then more importantly go through the charts. As per normal, just send a question anytime. I'm happy to give my best at answering it. So I think you probably had enough time to look through our risk warning there. So the big themes remain fairly consistent. If anything, I would say, Macron's victory in France makes European elections slightly less important. Less important in that there's not this negative force weighing on European assets at the moment. And it's interesting that last week European stock funds saw one of the biggest inflows of money ever, about $6 billion worth, I believe. So that's pretty big. So people are getting more interested in Europe again because this political risk seems to be subsiding. You see one under this week category, mentioned Merkel's party won a regional election in Germany. The signs are that the Germans are just going to stick with the status quo, vote in Merkel's party again, and again that's a bit less risk politically. And we're seeing the euro pop, and obviously the big level will be 110. If we can hold above there, then we could be off to the races in the euro. Another thing to note, I haven't got a chart of it here, but actually speculative positioning, according to the futures market at least, has turned positive for the euro for the first time in 3 years as of last week. So that's quite an interesting development. Obviously it doesn't have to sustain, but things starting to look a bit more bullish Europe. We've got the party manifestos here in the UK this week. I think the general theme is that anything that bolsters the chances of the Conservatives, if this manifesto goes down well, which it seems to be broadly speaking so far, then that's a positive for the pound, and increases the chances of K will push it through 130. We've got UK data this week. A fairly sort of mixed Bank of England last week. Didn't give us too much of an update there. It was pretty much steady as she goes. So whether there's any change at the Bank of England will probably be determined by this data this week, which is a bit of a deluge, but inflation, unemployment, retail sales. And earnings season in the US kind of nearing an end now. We've had most of the big results. Alibaba is a good tech company reporting this week. I'm hoping to write up a bit on that separately. But the theme from last week is the big retailers in the US, like the traditional shops that you see at the malls in the US are all doing pretty badly. I think that's generally weak consumption in the US anyway, and people attribute all sorts of different things to that, and just the fact that Amazon's taken over. For the euro again, worth watching the GDP and CPI data this week. CPI still above 2%, reiterates what we've been saying in these webinars for ages, that the ECB is probably going to have to start talking about tapering their QE program pretty soon, and that's another positive for the euro. Politics in the US is all focused on Trump firing FBI Director Comey. Trump obviously thought he was sort of going to be doing something popular here, because Democrats have been calling saying Comey was not fit for the office of the FBI after his releasing that extra report on Clinton right before the end of the election. But obviously he's getting a little lesson in politics now, because now they're all saying that Comey was doing a good job before they were saying it was a bad job. So yeah, that's politics for you. I don't think it's going to be a massive game change for Trump. People are talking about comparing it with Watergate. I personally don't see that happening, but remains to be seen. It's worth watching for sure. And then I mentioned the oil price jump. We'll look at the chart shortly, but that was mostly in relation to Russia and Saudi Arabia agreeing over the weekend to extend output cuts by 9 months, so helping to reduce the supply glut in the market a bit, but still not doing much to address generally weaker oil demand. So we'll have to see how that plays out at the moment. Pretty positive oil. So with that being said, I'll jump over to the platform. see if I can full screen this. So start with the euro. As I mentioned, basically it's this 110 level that's holding us up right about here. And you can see that kind of corresponds with the top of a kind of broad channel. Now this channel at the top has only had a couple of touches, but it obviously had quite a strong reaction, and it's fairly even to see at the bottom. So the risk is here that we roll over again from the highs and come down to the bottom of the channel, or somewhere thereabouts. I'm generally positive on the euro, but this was quite a big bearish week. It depends whether this support can hold. So far, there's a little fake breakdown of these lows here. We're pushing up to the top side, so looks like I would say at least we're going to get another test of the, maybe the bottom of the gap, or probably the highs, at least before rolling over. Hard to say whether it pushes beyond that, but for the reasons fundamentally I suggested, I think it will eventually. So short term might be some opportunities if we get a little. If I could just drop down to the 4-hour chart, in that kind of general context of believing it can get up to, this next move can get up maybe to the highs again. You can just see that we're kind of breaking high today. So if we do get any little pullbacks down to this breakout zone here, or even just to these old peaks, which is entirely feasible, that may be an opportunity to join in late. But obviously at the moment we're at the highs. The next opportunity may be on the short side. Once you get towards the peak again, there's bound to be some sort of reaction there, but it's obviously hard to say how much, and that would be counter trend. Jumping over to cable. So obviously 130 being the big level here, we're not quite there at the moment. We're around 129.75 as we speak. Still also, this is the kind of Fibonacci context of things, and you can see that we basically pushed above the 61.8, pulled back to it once, almost pulled back to it again. Obviously if that gave way, would probably turn a little bit bearish in the short term on cable, and maybe get an extension past these MAs, because we've got a good push past the moving averages. We've kind of come back, leveled out again, nearer the mean. If we roll out through those, then I would expect us to come test down the 50 and thereabouts. And at the moment, that quite fits in with this kind of general support, former resistance turn potential support there. But at the moment, it looks good for pushing up back to where we started up here around 135. But these things don't go up in a straight line, and we're bound to get some Brexit risk along the way. But you can't deny the trend is stronger. We had a little doji type hammer at the bottom here, and we had an inside day following it, although I think that inside day may have been the Sunday. To be fair, that was the Sunday, so you can't put too much stake on that. But two long-tailed bottoms, bit of an inside day, obviously the low, extended low, but a bit of a tweezer bottom, you could say. And then we're getting a breakout to the top side here. So evidence at the moment is that the trend can continue from there. What are we looking at here? Basically a little reversal pattern, candle pattern in the direction of the trend. Obviously you can't win everything, but that's generally one of the signs that the market's working as you would expect. We're going to go to the yen. Now, we've obviously had a massive collapse in the yen, a massive rally in dollar yen. At some point, there's going to be quite a sharp snapback towards the averages, but it doesn't seem to be happening just yet. Basically, that was the old resistance. You can see that we nicely pulled back to just about there. Missed it within a few pips. If you are looking to buy pullbacks back to the previous peak, which obviously you can see, look, we get the breakout here, pull back on the next daily candle. Here obviously we've got a big breakaway, eventually pull back here. If you are going for that, generally good to leave a bit of room for the spread, which is obviously quite small with LCG, but also just a bit of breathing room, because the market could take off before it gets to the level. So don't set your orders right on the level, because these things aren't perfect. But it looks like we're getting a bounce here in a continuation of the trend. on a weekly, if we just pull out on a weekly basis, looking at that previous week's candle, that's, if I get rid of our little line there, that's quite a, it didn't close the week lower, which would have been a really bearish pattern, but we obviously closed pretty well off the highs of the week. It was quite a strong reversal near the 61.8% level. So I wouldn't be surprised if we get another push up, but we could struggle here. Obviously you can look at the amount of resistance in this area. We're at the 61.8, and we've had a tentative first sign of a reversal. So this little run up here might be running out of steam here. Not really confirmed yet. Again, if we go down to the daily chart, I'd look for some sort of pattern to show that the trend is turning lower. Maybe a bit too late by the time you wait for the moving averages, but obviously once the MAs cross, then you look for a pullback and a resumption, later on when we're down here somewhere. So obviously the FTSE is at record high territory today. So our proxy, the UK 100, same thing. You can see it hitting above. Been a pretty steady uptrend since the this was bouncing up with the election, and then really last however many days that is, a couple of weeks at least, tracking higher pretty steadily. And the catalyst for it today is that oil prices are bouncing. So if we get a bit of a commodity price recovery, which has actually been a drag, and the FTSE's been moving higher even despite that drag, if we get those back in favour, like the miners, the oil companies moving higher, then actually we could be, if we get a breakout through that high, look at this consolidation pattern, what you'd really expect here is using a fairly easy to, these lows, these highs, project it above there. If you project this up, we could be on the cusp of a really strong move in UK stocks up to 700-800, which would be pretty massive, but to some extent could make sense in the context of the election. Tories win a landslide. Tories are thought of as pretty business friendly. Labour's policies right now, we've only had some leaked details, but they look pretty anti-business. Obviously debate the policies, whether they're the best for the country or not, but in terms of business, how the market's likely to interpret it, I would say quite anti-business. So again, strong possibilities here. Obviously the risk is this is a failed breakout. We turn back down into the range. If we get a breakdown through these old peaks here, around the sort of 7,400 mark, then I think that's our good clue that we're heading back into the range, and that could potentially be a good trade in itself, down to conservatively 7,200, but potentially down to the bottom of the range here around 1790. So Wall Street's been a bit of a funny one. We popped higher with the French first round of the French election, and we've just been chopping around despite a very good earnings season. So I think maybe the earnings season was priced in. We've actually done better than expected with S&P earnings, I don't know exactly, but over double-digit growth year over year at the moment for all the S&P 500 companies collectively, but don't seem to be able to push up into the record highs yet on the Dow, even though we have done on the S&P and we have done on the NASDAQ. So Dow sort of struggling a little bit here. Worth noting that Microsoft having a bit of a rough day at the office because of this this virus that's been spreading to the NHS, etc. So we're eyeing up, this was quite a good hammer pattern here. Didn't finish the day higher on Friday, but it was a good reversal off the MAs here between the 20 and the 50, which are popular to use. There was a false break of the low. It's back down to these peaks, so potentially that's the first signs for a move up to the top of the range here. We've had the intraday break of this inside day, so potentially the more aggressive traders could be in on a trade breaking out higher here. Obviously more conservatively, you wait for the close of the day for a bit of confirmation that maybe this uptrend is about to get the next leg higher. Germany 30's got an interest. I don't normally use these kind of trend lines above the highs, but it just seems to be working quite well. This is kind of maybe the outer extremity of it, but you can use some kind of internal ones that work quite well as well. and you can see it's working as support at the moment. So if that gives way, I'd suspect probably we're getting a pull back to the 50-day moving average. But keep in mind, this is the former record high from what was it, last year, I think. It's a pretty obvious uptrend. I don't think there's any real evidence that we're rolling over yet, but we are quite well above the moving averages. It's been quite a steady uptrend, so maybe time for a pullback, which will probably just be another opportunity to get in again. Again, bearing in mind that sort of pro-Europe theme that we were talking about before. While we're above this trend line, we're still looking good. We've had a series of inside days here, so we've had a little break of those inside days. Potentially at the moment, it's a false break as of now. But obviously, we haven't finished the day yet. We've still got a whole day of trading to go. So if we get a positive start on Wall Street, we could be looking at another record high here in the Germany 30. So we're right near the highs, so I guess the summary here is, potentially breakout for those more aggressive momentum traders. Those waiting for a pullback, potentially the old record high. We might eventually test that 12,400 level at some point. Here's oil. So we mentioned this trend line, I think. I'm pretty sure it was in last week's webinar. At the very least, it was in our week ahead video, and it's worked out pretty well. You can see that there was a close. We pushed up higher, touched the trend line a couple of times. The body of the candlestick couldn't do it, and then we had a little break on Friday, and then over the weekend we've had this positive news from Russia and Saudi Arabia. So now we're back up to what even potentially could be an area where the market turns lower. It's this previous peak here, it's these peaks here, and it's a 61.8, and it's just above the moving averages. So if you consider this downtrend, where we're making lower highs and lower lows, potentially this is a sell point. But given the fundamental news behind this, given the strength of the gap higher, I'll be a little bit cautious about going against the momentum now. You can see that we keep almost fully retracing the moves that we, big move lower, up again, big move up, almost all the way back down. So it's kind of a range at the moment. I wouldn't classify it particularly as a really strong downtrend. I would say probably this is just part of this kind of general uptrending range, and so there's a good chance to push right up to the top again. So I've got a little arrow here, so I think it's one of those that if you do see a big reversal, candlestick on the daily chart or a pattern forming on the short-term chart, then it's a significant level, it's an opportunity. I just don't think it's going to hold too much weight, judging the general environment that we're in. Right, okay. So this is his gold. So we had a little bullish engulfing pattern off the trend line, off a nice rising trend line here. So a confluence of support from that. It's been a vaguely significant area in the past. We're obviously just ahead of that 1200 level, and we've pushed higher the last couple of sessions following that bullish reversal. It wasn't the strongest pattern I've ever, I think, but I think what maybe the benefit of hindsight is we saw that first attempt at making a bottom, and then we kind of did like a false break beneath it, and then we found the trend line. So I think by this stage, we've broken above the engulfing high. It looks like we're pushing higher again, but again, I would maybe highlight this level, a bit weaker. Given how far we went past the moving averages, given the trend line, I would suspect that we can actually get up to this old level up here. I think it's my line's a bit wonky, but generally in line with these two peaks here, which is about the 1260 mark. It seems like we could get there in in gold. Again, it's also in a kind of rangy uptrend with the occasional big sell-off, but then seems to steadily recover again afterwards. So on that premise, you know, I think there's an opportunity that gold could push higher here. That said, if this reversal in the lows fails, there isn't too much in the way of support. You know, these swing lows here, but I think we'd probably push right down to the lows of the year if we actually did break this trend line. Worth mentioning silver. Obviously, it had a massive sell-off, down almost 18 days straight, and then we've had a similar little kind of false break here at the low, a couple of inside days, and then a nice breakout to the top side here as this recovery gains a bit of momentum. This would be a potential sell point, but again, I just think we got so overextended to the downside. Probably, you know, there's some short capitulation going on, and people are taking their profits, and the market can probably move up to this 17 mark, or 17 and change, has been quite decent resistance, a decent pivot level, and it fits nicely between the two MAs. But it remains to be seen. Obviously, we've got these levels highlighted as potential reversal areas. At the moment, the market momentum seems to have shifted to the top side. And just want to, I don't always mention it, but I think quite a big, significant breakdown in dollar CAD, obviously not unrelated to the fact that Canada is a big oil exporting country, and oil's breaking out higher. So we had a massive period of CAD weakness when the oil price was dropping, so dollar CAD strength, and now it seems like this is a fairly cut and dry breakout at this stage. We'll have to see how the day closes, but it's looking good. And I would expect that we actually probably push down again. You know, I'd actually think that we'd probably make it down here, which would be, if you have your 137.25 is like above the daily candle. You know, if you've got your breakout zone as 136. 50-ish, then that's about 2-to-1 ratio risk to reward if the market drops down towards that 61.8 level. So depends if you think the oil price recovery's got legs. If you do, CAD hasn't moved as much as the oil price has, so maybe this is another way to play it. Just had a quick question here about, obviously I can't comment on your specific positions, but you know, I can tell you where generally I think we're going with the euro. Well, yeah, so obviously, you know, the trend is higher at the moment in the euro, but I do think this was quite a big bearish pattern. So there's certainly a risk in my mind that we roll over from the highs. You know, if you take the idea that this part of topping pattern, oh my goodness, it's just too many. All right, a little lesson in how to predict your fibs. Excuse me for this. Right, just add those two back in. So if you talk about this big pattern on a weekly basis, you know, that kind of pullback there, drop down to a 4-hour chart. You can say that we have pushed past, you know, we paused at the 50 level, we slightly paused at the 61.8, we pushed through there, so it's looking quite strong in the market, I'd say, at the moment. I think the last line of hope for a turn lower is just above where we are at this 76.4. Possible the market turns over in between these areas, but I'm not too convinced it can get down and break through the lows. I mean, as I said, I've got a general positive bias, but this was quite a big turn lower from 110, which is a big number. So certainly a chance that we roll over. If it gets down through this level, I think it can go much further. This is really the line in the sand, this sort of 108.50. See, now I'm just kind of, what I'm trying to do here is drag out questions so I can actually see them. Yeah, I've had a couple of comments on the dark screen. I feel like it looks nice for your own personal trading, but maybe it's not the best for the webinar. So a couple of people have said that. So you know, depending if we get, unless we get too much commentary the other way, maybe I'll try and use a light backdrop for the next one. Yeah, a few people saying the same thing. So yeah, apologies. I think part of it as well is what I try and do is have the indicators. I don't want to be as bright and powerful as the candlesticks, so I use like murkier looking colors so that I'm not overly focused on the indicators. I'm more focused on the actual price action, because that to me is the most important aspect to follow. The indicators are kind of secondary part of the analysis, but the result is you can't see as well on the screen. So, that indicator at the bottom is an RSI. Sometimes I'll use what we've got. Sometimes I quite like to use the MACD, not the crossover, which is the normal one, but the histogram. I quite like to use, and I'll actually get rid of the line. You know, you can obviously modify these indicators, kind of customize them. Could have done that at the start. Then just leave the line, and it gives you a little general indication. It's kind of where the trend is. You know, while you're above the 0 mark, you're generally in a sort of bias of an uptrend. It's like two moving averages crossing over. Obviously, it's lagging. You know, it can give you a kind of general bullish bias. If you're more aggressive, it's once the histogram starts turning higher, then the momentum is shifting to the top side. Whereas if it's turning down, the market's still turning. You know, once it rolls over, it's pushing higher, and then the final confirmation is you turn above the signal line. So it's a good little secondary for in terms of judging the trend, but again, the risk is you start focusing on that too much versus what the multiple things that the candles are telling you. I had one question here about why focus on currencies. Well, I guess I've got 3 currencies on the screen. Dollar CAD was just sort of interesting because there was quite a big breakout. Normally I follow the sort of 3 currencies, 3 indices, and the 2 commodities. Honestly, that's just because they are the most popular products at LCG, and you know, the nature of the job is I can't specialize so heavily in individual companies, although we do sort of comment on them. You know, generally when it comes to individual stocks, it's more like you're following the earnings story of the company, coupled with a general sense of where the stock market's going. You know, the currencies tend to be more like the macroeconomic picture, plus a lot of technical analysis. Yeah, I would say that probably on balance, the futures markets, which a lot of these products are based on, lend themselves better to chart analysis than many of the others, individual stocks particularly. So yeah, so that's it. Hope that's all right. Just I was answering the questions at the end this time. I've got the questions and answers on a distant screen, so I hope that's okay by everyone. Yeah, a bit difficult to change the screen color in the middle of the webinar. That could have gone a bit awry, but I'll certainly keep it in mind for next time. Quick question on euro sterling for those who are interested. So we've got the short-term hourly chart. Obviously, there's some generally positive kind of euro news going on at the moment. I highlighted somewhere, at least maybe it was Twitter, that we sort of filled this gap. You know, this was like the Macron gap, if you like. We came back to the edge of it, bounced a bit, filled it with a little false break of that low. and then we had quite a nice bullish engulfing candle here. So at this stage, the market was looking quite positive. We followed through. Now we're edging back towards this kind of resistance area. It's more of a zone. So, you can draw a line, or, if you prefer, you can, maybe draw a kind of zone of resistance. If we get through this area, I think it's looking pretty positive, because obviously bearing in mind we've just come off these lows here, there's a good chance euro can pop up here. Economic data-wise, I would say the euro deserves it. There's probably a bigger shift in economic policy from the European Central Bank coming up than there is from the Bank of England. So that's probably the main catalyst fundamentally as to why actually we could see some euro sterling up strength, some strength, at least maybe just towards the top of the range in around here. That's if this level gets taken out. Obviously, if we fail there again, then actually we're looking at quite a significant break to the downside. So there's reasons to believe either one could happen. But yeah, needless to say, if we take out, I think it's around 83, is it, or 80? 83 and change. If we give that up, then I really think we head pretty low. We're really we're heading back down towards the sort of pre-election levels almost, pre-Brexit levels almost. All right, so thank you very much, everyone. I'm not going to drag it out too far. I'm going to extend it a bit longer than normal just because of the questions, but I'm very glad of questions. Glad you're all taking interest. Hope that was useful. Good luck with trading for this week. As a reminder, there's do a screenshot if you want there, the big themes for this week, but it's not rocket science. I'm sure you got it all. But again, thank you very much for attending. Follow me on Twitter for the latest updates. Joking, posting a few charts on there, and just a few comments on what's happening in company and economic news. All right, thank you guys. Jasper signing out.